Hey friends, welcome back to the RonnieV show. Today, we're going to be talking about PayPal stock and whether or not you should be investing your money in them or not. And spoiler alert, I am invested in PayPal and I think there's a huge opportunity here. As always, we're going to get into my high five snapshot a little later. We're going to get in a little bit of the monthly chart, seeing where this is going in the long term. But first, we're going to get into what PayPal is, who they are, and what they do. So let's get into it. So here we have Seeking Alpha pulled up. We ran PayPal through their AI analyzer, and it just kind of tells us a little bit about them. It tells us, they've been established since 1998, sorry. And basically what they do, the company is renowned for its robust digital wallet services, which include PayPal. Most of you should know what PayPal is, who they are. Venmo, a lot of you should also know who Venmo are. And then Zoom, Zettle, Hyperwallet, Honey, and Paydy. A lot of you guys are not going to know who they are or what they do in those business segments. And those are very small business segments. I really focus on three things. PayPal is their overall app, and they are continuing to grow that. They're continuing to have users spend more money, and they are actually starting to grow their users again through PayPal. Venmo, which is a younger, more hip version of PayPal and what they do, and that is going to be a very big, growth trajectory for them overall. And I just think that they can really continue to grow that and monetize it more. It's really for, you go get your hair cut, you split a pizza with a friend, you have your business set up at, a yard sale or whatever, right? You have something set up, and you can easily have somebody scan your Venmo app and then your Venmo QR code, and then they pay you right then and there. It's very seamless, very simple. Their main competitor is Cash App. Probably a lot of you all know that. But overall, PayPal, Venmo, and actually Braintree. Braintree is so undervalued by so many people when they talk about PayPal, and no one even really knows what Braintree is. Essentially what Braintree is and what they do is they integrate across, multiple small businesses, large businesses. Whenever you go and you click to buy something on a website, Braintree is really behind all of that. They're the ones really, allowing those payments to go through, especially with PayPal. So Braintree is such a hidden gem within PayPal and can be a massive growth rate moving forward. They're not really focused on growing that out rapidly right now. They're just kind of letting it stay and controlling it right now. They're really focused on PayPal and Venmo and bringing those to the forefront. And then they're going to really start ramping up Braintree even more here in the next year, I would say. So probably the second half of 2025 and in the first half of 2026, they're really going to get Braintree ramping up. And that's going to be massive for this company, in my opinion. And that's going to be the next leg that's going to drive them higher. So just going over more stuff, basically think of them, you have Visa, you have MasterCard, you swipe your credit card, you swipe your debit card, you pay for things. PayPal is the same thing. It's a payment option across the board. They do have a lot of competitors, obviously, in the financial world. There's so many competitors out there. Visa, MasterCard, Block, Upstart, Zelle. So many different competitors out there. But the thing about it is, there's always been competitors, and there's always going to be competitors. And what has PayPal done time and time again? They've continued to grow the amount of money that people are spending on their apps, and then they're also continuing to grow their revenue at a consistent basis. They're not in the 20% or in the teens of growth anymore. They are in single digit growth right now, but that doesn't mean that this company, you shouldn't be invested in them. You should only invest in growth companies that are massively growing, right? That's not the case at all. And what I'm going to show you on the high five snapshot is going to show you exactly that you can get better returns than some of the best growth companies out there, because a lot of them are already priced in, even after this massive correction that we've had. So those are the competitors, but like I just said, they've already proven time and time again that they can continue to move around and basically get in a place where they can continue to grow and do great things. So PayPal is considered a hold by Seeking Alpha's quant. C valuation, growth is a C, Profitability is an A, D minus for momentum, just because they haven't really gone anywhere in a while. They're basic. They're establishing this base, and B plus for provisions. They have done a ton of different valuation metrics here and everything, but we're just going to skip through that. We're going to talk about the high five snapshot and what I'm seeing there. Positives raised by analysts on Seeking Alpha. PayPal is considered a strong buy due to its undervaluation and robust positioning in the digital payment sector, supported by its extensive user base and innovative offerings like Venmo and PayPal. The company's strategic investments in stock buybacks and AI-driven innovations, alongside its growth potential is key verticals present a compelling opportunity for substantial earnings growth. And then concerns raised. PayPal faces challenges from declining return on invested income and free cash flow margins, indicating limited long-term value creation, as well as weak competitive moat amidst strong competition. I will argue the free cash flow margins have significantly dropped. I haven't seen that really at all. Maybe a little bit, but nothing crazy. The upcoming Braintree contract renegotiations could negatively impact revenue, with a 5% revenue headwind expected in 2025, raising concerns about the company's growth strategy. So again, Braintree is going to be a driver for this company. I don't think it's going to be a headwind for this company. And I think this is just something like, oh, renegotiations are coming up. It could be an issue. Yeah, everything could be an issue. But is it going to be an issue? I don't believe so. They're such a profound leader in that space, and really one of the only companies really doing really in that space, doing well. So yeah, that's Seeking Alpha. Let's get into the high five snapshot here. And the first thing you're going to see is that we have a massive 38% current margin of safety, with a fair value of $114 per share. And the current price is $70 per share. Free cash flow margin rate, currently they're doing 21% free cash flow margin rate. So I went a little conservative. I did a 20% free cash flow margin rate. And then here you have for the first 5 years, 20% free cash flow margin rate. Essentially, how much free cash flow are they getting from their overall revenue? That's what this is. And then for the last 5 years of this 10-year analysis, they're doing 23%. We have a 10% discount rate, a terminal value of 10. A terminal value of 10. So at the end of the 10 years, you're only going to pay a 10 multiple of free cash flow for this company. That's insane. That is so low when they're like 5-year average is like 15 or 20. But I want to be super conservative and say, you know what? Let's throw a 10 on this thing. A 10 is crazy because the average in the S&P 500 is a 15. This stock, it's a broken stock. It's not a broken company. Revenues continue to climb. They continue to have growth in revenues. They're growing EPS. They're buying back shares like crazy. They just bought back like 3% of the outstanding shares in the company, and they just did another like they just authorized another $15 billion buyback or something like that. They're buying shares back like crazy. And if you follow Apple at all, you understand that when you buy shares back like crazy, your EPS is absolutely going to go through the roof. Even if you're not growing at a super high clip, but if you're buying back shares like crazy, it's going to drive your EPS through the roof. And that is really my play for this name. I'm not expecting them to get back to double-digit revenue growth. I expect them to do anywhere from 6 to 8% over the next 10 years. But even if they did 5%, even if they did 5%, right, for the next 10 years, they only did 5%. If they stop doing 5%, there's way bigger problems. I cannot see them stop doing 5% average per year for the next 10 years. And we still have a 32% margin of safety, fair value, intrinsic value of $103 when they're currently $70 today. Meaning that you could pay $103 today, not $70, and you'll still earn a good amount of money over the next 10 years. So also they're doing $31.8 billion in revenue. Free cash flow is at $6.8 billion, only doing $1.2 billion in stock-based compensation, so only diluting a little bit, and they're continuing to work on that and bring that down. They have almost $10 billion in net cash to net debt ratio, right? So they have $10 billion over their actual debt. which is absolutely outstanding. And they have exactly 1 billion shares outstanding right now. And they're going to continue to bring that down to 900 million, 800 million, 700 million. They're going to continue to buy back shares like crazy. And again, putting a 5% revenue growth rate for the next 10 years, you still get a massive discounted cash flow model where you get a massive, $103 intrinsic value. And if you give it the actual 15 PE or free cash flow margin that it deserves, you're up to 125 with a 44% free cash flow margin. So let's just leave it at 10. And yeah, free cash flow yield 9.65 and 9%. Massive. I like anything over 3%. Getting a 9% here is absolutely crazy. And then EPS for this year is $4.66. Their next 12 months forward EPS is going to be $5.04, bringing them to a current PE of 15. Their current PE is 15. Absolutely insane. Their forward PE is 14. Absolutely insanely undervalued. Like, you're getting a company that's buying back stock like crazy. They're probably going to start doing a dividend as well. So you'll be able to grow that dividend in this company. They are the leader in fintech in this space, like the leader. Everybody knows PayPal, and they are worldwide. This is a no-brainer. This is a no-brainer. You buy this, you sleep well at night, and you wake up in 10 years, you're going to have a $300, $400 stock, and you bought it in the 70s. So as here, you could see the 10-year discounted cash flow model here, annual CAGR of 18.5%. The S&P 500 on average does 8 to 10% per year. You're getting 18.5%. You're crushing the markets. $382 is what the price should be in 10 years. 10-year EPS annual CAGR of 16.3%, $318. So we have a buy, and a buy. 30%, 32% current margin of safety, getting 18.5% and 16.3% annual CAGR rates with 5% revenue growth. And I already showed you that they're really supposed to be doing, 8, 7. They're supposed to be doing 7, 8, 7, 6, 6, 7, 6, and 8. Not perfect, guys, but we got back to 113 basically. So pretty dang close. So free cash flows continue to go up. Revenue is continuing to go up. EPS is going to actually explode. And these are conservative numbers. I don't think analysts are really taking into consideration of how much stock they're buying back at these low prices and how much it's going to impact. They're thinking like their revenue is just going to slow down to like 0% or something like that. They're going to stay in the mid to high teens for 10, 15, 20 years, in my opinion. As the world continues to grow, as PayPal continues to spread across the world to countries that aren't, advanced, that don't have iPhones, don't have phones, all this different stuff, right? It's only going to get better, in my opinion. So triple buy on this name. Absolutely phenomenal. I'm loving this. I'm loving PayPal. I'm a shareholder. Like I said, I think I'm going to make stupid money on this name. Stupid money. And the risk to reward is dumb. Send it back down to 50s. You're getting a 50% margin of safety. I'll buy a truckload. Like, as long as my investment thesis doesn't change, as long as they don't do some really dumb things, which Alex Chris, the CEO, is doing phenomenal, in my opinion. They had that Will Ferrell commercial. Loved it. Thought it was hilarious. Loved it. Thought it was a great marketing tool. And they actually got a lot of business from it. He worked at Intuit for a long time. He's the one that brought MailChimp over to Intuit, which was a multi-billion-dollar deal that made Intuit so much money. So he's younger. He knows what he's doing. Like, the CEO's great. The valuation's great. Like, it's a buy all day for me. Like, you guys are going to do what you're going to do. Do your own due diligence, obviously. But I think this is an extremely undervalued company, and it's a broken stock meaning that the stock price isn't going up like crazy when it should be, not a broken company. Yeah, these are analyst EPS growth rates. I think they actually grow way faster than that because of all the buybacks. And again, a 15 PE dropping to 13 and then doing 10. I'm being so conservative on this, and we still get a fair value of $102.46. Getting up to $136.32 in 2034. It's just silly. It's just silly, this valuation. The valuation is silly. But moving on, again, I think there's a massive buy. Moving on finally to the charts. I just posted on X about this, talking about, what if I told you that, looking at this chart, what if I told you that PayPal gets back to all-time highs? Would you buy it at $70 per share? Of course you would. That's a 341% gain on your money. Of course you would buy it. But that's why I'm here. I'm here to put out these types of videos so you can see the charts, you can see the high five snapshot, you could see and understand why and how undervalued this company is, and why it's not a value trap or whatever anybody else wants to say about it and talk crap on it. Like, it's just massively undervalued. Not only that, but if you're part of my community, obviously, we talk about the high five indicator here. Obviously, in the community, we're investing in trading meat. We have our trading channels, we have our investing channels. We keep the two separate, but we do conjoin them in some aspects, such as this. On investing, I want to know when the turnaround is happening. What do we see here? Since 2022, we've dropped down in the bear market, and then we continue to drop down, and then we started coming out, right? And we started making this ascent higher. We made this ascent higher to about almost $100, and then we got kicked right back down with this new correction that we're having right now. But the biggest thing is that we had this bullish cross right there. When the high five indicator, which is my personal indicator, when we have a bullish cross of the smoothing line, we have a very large chance of going higher and being able to ride that higher and higher and higher and higher. Example, we made, well, this doesn't count back here because this was IPO and it doesn't really show, but you could see like we broke out here and we rode that higher and higher. And then let's just say that right here was the cross, right? We dipped down and then we made a cross and we got this buy signal, right? Well, look, we went from $100 all the way to $300. So we 3x'd our money. Absolutely crazy. Absolutely crazy. You see, we've had, really, honestly, since IPO, the high five indicator has made 2 crosses. One bearish, one bullish. Bearish cross, we sold all the way down. Now, we are in the mud. We are so far down. We are so undervalued. We are so disrespected as a stock, PayPal is. We made a bullish cross. And with this bullish cross, even though we're having this pullback here, with this bullish cross, I think as long as we stay out of a bear market, that's the tough thing. If we enter a bear market, then we could definitely go back to the lows of 40s, 50s, but I'll keep buying. And then we eventually will, because the fundamentals aren't bad here. The stock's broken, the stock price is broken, not the actual company. So even if we come back here, I'll keep buying, and then eventually we'll make another bullish cross, and then we'll ride that higher. I'm telling you, I just showed you that the fair values in 10 years, most likely getting to 300 plus, right? So absolutely massive. I think this could be it. This could be the move as they continue to climb higher, as they continue to keep doing what they're doing. Value investors are eventually going to see like, wow, this thing is just crazy undervalued. I can't not take part in this. But you see, we had this nice rounded bottom, and we came up, made this bullish cross, came back to retest this area. You see, this has been pretty stiff support and resistance zone here, from about 65 up to about 74. So buying in this range is really good. Pretty good risk to reward. You know the risk. The risk is down to 50, and the reward is up to 300 plus. So that's what I'm seeing, guys. I think PayPal is immensely undervalued. I think the chart looks really good as well here. Um, don't know what the economy is going to do. Don't know what the stock market's going to do. Obviously, we could go into a bear market and they could fall back down here to 50 or 40. But we already know that it's extremely undervalued, and getting it at that price is absolutely insane. So, yeah, if you like this content, guys, I'm gonna keep doing it. Especially if you guys like it, like, follow, subscribe for more. If you want to join the High Five community, investing, trading, whatever you're looking for, we got it all. We got it all. We got live streams. We got a High Five portfolio here where I give you all my buys and sells. We got snapshots here, just a running log of them. I consistently update them. We got deep dives. All these videos that I'm making and putting them out to the public, the High Five community gets them as soon as I make them. We got due diligence. We got the community chat. Like I said, we got trade alerts for trading. We got High Five Pro, High Five Elite. We got all these different tiers. So much content. Courses. I'm currently working on an investing course right now to provide for the investing tier. We got trading course. We got it all. If you're interested, come join us. If you're not, I appreciate your support here as well. And yeah, thanks for tuning in. I'll catch you in the next one.